Thanks for joining me in my market report. My name is Mike, and this market report is on mortgage rates. We kind of like to get into the nitty-gritty of what impacts mortgage rates on a daily basis, whether it's economic data that came are released, or if it's headline news or investor sentiment. We kind of like to give you the back-end information that may not be out there in the news media. So we kind of want to provide you, if you're in a position where you're looking to refinance or you're looking to buy and are interested in where mortgage rates are currently at and where they're going, this is a good place to stop by to take a look at what's impacting them on a daily basis. We bring these reports out on a daily basis. And, well, a little bit about myself is I'm a loan officer, so I watch these on a daily basis and want to provide that info out to you guys. If you guys got questions about mortgage rates, please feel free to reach out. As I do work with am a loan officer, do work with a national lender. If you guys are looking to refinance or purchase, we're here to assist you as well. Please give us a shout. We'd love to be able to look at your scenarios and see how we can help you guys out. Again, we're here to assist if you guys got questions about mortgage programs or you got questions about these mortgage rates, or if you guys got questions about the process or anything else we can assist you with in these areas, please feel free to reach out to us. In the meantime, we'll just jump right into the first thing here, and that will be the economic data that's being released today. Today is actually a pretty big day for a variety of reasons, but we'll start off with the economic data. And the first one will be the personal income for the month of July. So in June, it went up 0.1%. July was supposed to go pretty close to that at 0.2%, and it had a big spike at 1.1%. Now, on the other hand, we got consumer spending, and the month of June, it went up 1%, and forecast come for 0.3%, and it came in expectations. So we got kind of a reversal there. So people made more money in July, however, they spent less, and vice versa. Went from made a little bit okay in June to making more money. So same thing in consumer spending, as you can see here, where we had a big jump up, where we had a big jump downwards for spending and income. We got a big day for inflation data. This is the Fed's favorite gauge for inflation. So the headline news is the personal consumption expenditure, or PCE. Back in August, it jumped up 0.5%. Forecast it only jumped up 0.4%. So it brings this year over year from 4% to 4.2%. Now, the Fed calls this the real inflation. This is what they look at, is when you take out food and energy, which gives us the core PCE. And that went up from 0.4% with a forecast of 0.3% and coming in expectations for the month of July. Now, it's year over year. This was actually revised slightly higher to 3.6, and basically came in expectations and remained the same. So it didn't go upwards. However, June was revised slightly higher to 3.6. So with that revision, it remained unchanged from the previous month. Now, consumer sentiment. The mid-month flash number came out at 70.2, but the number for July was actually 81.2. So the forecast gone for 70.7, and it came in shy of forecast, but slightly higher than the mid-flash at 70.3. So it was a pretty big drop from 81.2 down to 70.3 for the month of August consumer sentiment. And of course, a lot of this has to do with the rise of coronavirus, the Delta variant, more restrictions coming in, so people weren't feeling as rosy about where things are at or where they're going. Of course, we also got the whole Afghanistan, so people are not feeling good about that as well. So we got a lot of whole things going on right now that people are, not feeling so good about. Last but not least, this is the big one for this week, which is the catalyst for all things, and this is the Fed's Jackson Hole by Jerome Powell, the Fed chair. Everybody's been waiting to hear from him to see his thoughts and views and any information he's going to provide about tapering. Now, the thing about tapering is he is in favor of tapering this year. However, he was not very committal, or did not specify as to when he's going to start this. So, of course, that leads many to believe that he wants to see more data. We're not quite at maximum capacity for jobs. We still got some room there. And then, of course, inflation, he does see that it can be a concern. so that's something he's watching as well. He's hoping over long term it will continue at the 2% level. However, for the most part, people are viewing uh, that the Fed is taking tapering seriously. However, they want to see a little bit more data, especially with the rise in Delta variants out there and how that might impact the economy and jobs. And uh, if they don't want to pull away too soon, if that has a negative impact, then they have to come back and implement the same deal. So they want to keep it going for a little bit until they can be assured that the Delta variants or that we're not gonna this is gonna not gonna impact negatively the economy going forward. So you do see a lot of upside to it that we could hopefully get to pre-pandemic levels. Um, but right now, again, it's all data driven right now. So this could lead us to again another important tipping point for the September FOMC, which will be towards the end of the month. So stay pre-prepared towards the end of the month. Things get a little choppy again as people will be listening to Fed members on their talk and see if they will begin the tapering again discussion again at the FOMC meeting. So without further ado, let's jump ahead, see how this is headline news. Stocks are up again. This is the catalyst. The Fed Chair Powell's speech today. That the markets liked it. They were fine with, or at least let me say this: they weren't exactly like it because they like to get more information. They're being transparent. However, they're being vague on a lot of things as well. So uh, but the stock market was fine with that. So uh, they just know that the Fed has tapering on the minds. However, it's just rather than going too soon and hurting the economy, they want to remain open to it and wait until we know we're out of the woods. And mortgage-backed securities also doing a pretty good dance here. So this also helped mortgage-backed securities. We're rising. We're breaking back above the 100-day moving average. Now also breaking above the 50-day moving average, and we're up 23 basis points. So we are seeing better pricing than what we saw yesterday. So we're kind of getting back to the level we saw earlier in the week or on Monday. We're starting to get to that level right now. We're pretty close to it. Pretty close, a little short of it, but close to where we were on Monday. All right. And then Treasuries also dipped down. So as you see, so far this technical level held and pushed yields down further. It's also testing its 50-day moving average, approaching the next level at just under 130, 1.3 technical level. So we'll see if we can get down there. But right now, we're currently at yields 10-year Treasury at the 1.32 level, and dropping a little bit further. All right, folks, hope this all makes sense. I hope this helps you with the information this week. If you guys got any questions, again, we're here. And if you like these videos, please smash that like button. We greatly appreciate it, and we appreciate you guys. And again, please feel free to reach out. We'll enjoy your weekend, and we'll see you on Monday's video. Have a great rest of your day, and enjoy the weekend. Bye-bye.